Joining us to help make sense of the craziness we've seen in the gold market recently is Peter Hug. He joins me on For Pete's Sake up next. Happy New Year, Peter. Nice to see you again.
Happy New Year, Daniela.
Peter, we've seen a lot of volatility recently. Can we expect more to come in the gold market?
Yeah, I think this year's going to be more volatile than 2012. There's a number of things on the agenda over the next 60 days. But whether the market goes to $1,400 or to $2,000 an ounce, I think it'll be a very volatile year for the metals.
Peter, I know we managed to avert that fiscal cliff, but I believe you've said to me offline that doesn't mean it still won't continue to haunt us. Yeah,
I mean, going back a few weeks or a couple of weeks prior to Christmas, we were out of this market at 1703 and 3250 on gold and 3250 on silver. And, the last 2 weeks of the year was just manic selling in anticipation that there wouldn't be a deal done, in anticipation of higher tax rates in 2013. The deal that was finally accomplished on New Year's Day, I believe, might have been New Year's Eve, wasn't a deal in my opinion at all. It was a joke, but it caused enough sensation that people felt that their movement back into risk assets was back on the table, and I think there were a lot of people short the metals, and that caused that run up to 1,700 in gold and back up to 31 and change in the silver price.
So, Peter, obviously we're seeing weaker gold prices right now. Do you see this as a buying opportunity?
Again, as a trader, it really, when I speak, it's and I hate repeating myself. It's really a matter of defining whom I'm speaking to. As a trader, I'd still be out of this market. I'm not convinced that we haven't seen the low. By the low, I mean, I'd be tempted to put my foot into the gold market in the 1625 range. Silver 2850, 2870 would be interesting to me. I'd probably take a small flyer in the 2920 range as a trader to go long. From a longer term perspective, for people that need precious metals or should have precious metals in their portfolio, I think these are excellent accumulation price points. Again, I think volatility will continue in 2013, and I still am in the camp of seeing the highs of 2011, 1926 range on gold taken out this year.
Taken out this year.
Mm-hmm.
Peter, are you preferring platinum or palladium right now?
Again, I'm not of the camp that this economy is full steam ahead yet. If I were, I'd start to have some concerns about the Fed. I don't have any concerns on the Fed side until the earliest 2014. Platinum and palladium are more industrial in their usage. I think the first 6 months of this year could still be soft on demand. I think Europe is still fighting its way into and through a recession. I am not convinced the U.S. is going to have growth much above 2% in the first 2 quarters of this year. Buying dips on palladium anywhere under 600, in my opinion, is a buy on palladium. And on platinum, under 1550, I would be buying this for longer term appreciation on the anticipation that the economy will start to pick up some legs at the end of this year or the second part of this year going into 2014.
Peter, just to recap now, do you still think $2,000 gold is possible within the next 6 months?
Don't know if it'll be in the next 6 months, but I do think we'll take the high out for gold in 2013. Take out the geopolitical factors of the Middle East. I am not in the camp of all the gurus that are out there now saying that the Fed is going to stop their easing policy in 2013 and that interest rates are going to go through the roof. I just don't see it. I don't think the economy has enough legs to substantiate the Fed not continuing its easing policy, at least through the balance of this year.
And we'll definitely be closely watching what the Fed will do, Peter. Finally, just to recap, key numbers you're looking at for gold and silver.
Short term, I would really like to see gold sustain itself over 1678 as a first target. and then 1703 needs to be taken out for me to be aggressively long this market. If I was picking a trade, again, 1625, 1630 level, I would take a long position with a tight stop at 1610. Silver, 2920 would be a point where I would take a stab at the market with a tight loss at 2870, but would be aggressively long this market if we saw the 2011 April lows of the 2650 range.
Peter, thank you so much for your thoughts. We'll see you next week.
Thank you. See you again.
And thanks for watching this edition of For Pete's Sake. You can email me any comments or questions at newsfeedback@kitco.com or tweet me at Daniela Cambone. Thank you for watching.